Got something in common. A lot of good things in common. You know what? We also have in common hard work, dedication, selfless service to the nation. Good morning. It is Saturday, guys, and I've been doing some homework. I don't know where I found the time. I actually went to bed, woke up, and I started like going around the internet because there's this young lady that I follow on Twitter. I don't follow her, but I read her stuff. Her name's Kirsten Shahagasi or Shohana. I don't know how to say her name. Okay, I don't even care. I really don't. I just know she puts out a lot of information. It's the stuff that I started reading a while back about ANSON funds. And I was like, okay, it kind of makes sense. ANSON funds and their partnership with Andrew Left. People know about Andrew Left. He is the guy who came out with the Citron research piece and said, hey, it used to be called, I believe, lemon stocks, if I'm not mistaken. But it's called Citron Research, and he went in there and he said, hey, GameStop's, we closed our short position. We're no longer short, blah, 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 blah. But they were saying GameStop was a $20 company when GameStop was all the way up to $336, like the day of type style. So trying to control the short, trying to put out this narrative in this point. But nobody could figure out why. It was like, Andrew, did you put it out there for yourself, or did you put it out there because someone else is short? And we know the truth now. We know it's ANSON funds. We know ANSON funds, and his name is Moez Kassam. Moez Kassam is the typical scumbag you would think he is. Okay, he's a short seller, and proud short seller. The one thing I found out about Moez Kassam as I started reading up on him is that he likes to talk. I mean, he really likes to talk. I've seen these short sellers and these hedge fund bros and these so-called great traders of our lifetimes. I've seen them and they love to hear themselves. So whenever you're interviewing them, just let them go. Let them say some shit, and they do. So here's what happened, guys, okay? Don't worry, I did all the homework for you. I found an interview with Moez Kassam. And Moez Kassam, I think that's how you say his name. That's what we're going to call him today, Kassam. Moez comes out and he says a little too much. And I've got it. Now, mind you, this interview only has like 1,000 views. And it's only 3 weeks old. Let's go get it. Enjoy your Saturday.
If you're a dog company in a random biotech or healthcare company, you're not getting that type of retail investor excited. But you end up finding these around the big theme. So crypto was a big theme, and AI and data centers is a big theme. And you have industry leaders, but then you have a bunch of people underneath that are just sort of, we call them the Me Too's. And so for us, we gravitate towards looking at those types of situations and taking advantage of them trying to be in an area where they really shouldn't be, because they're just trying to get the retail investor behind them, which is what we're seeing today in the meme world. It's everyone's trying to be that next meme-esque company.
And do you like to go against the memers as a short seller, or is it just something that you watch for enjoyment and for fun?
For me, enjoyment and fun and the investment go hand in hand. So yeah, I enjoy being on the other side at times. I'm a very big, I appreciate, the Wall Street bets type world that exists. I never thought it would be possible pre-COVID that you could have this type of organizational structure and flow and could actually work. And the meme army, it was a fascinating time for us. And so, for us, we try to focus on the smaller situations. So everyone was focused on GameStop, and that's what really got the army together. But we had a very successful outcome for us looking at Hertz and AMC that was the same type of investor, but what we believe didn't have that same tail risk as GameStop.
So let me just go ahead and run this back for you. He said it flat as day. He said GameStop is a problem. GameStop's tailwind and strength and army, which is you, is a problem. They can't compete with it. All they can do is go to AMC and companies like Hertz, other short positions that are trying to be GameStop, and they're not. They manipulated everyone. He has been known to manipulate every single investor. And I'm going to give you all the proof in the world today. I'm going to show you everything. I'm going to give you so much proof as in to tell you what I've learned about social media and platforms and how people actually get in front of the camera. This interview, for example, he does an interview with a no-name webpage that has 1,000 views, guys. Why are you doing this interview? What information are you putting out that you're trying to project that strength to your investors? Because you know who actually sponsored this interview? This interview is sponsored by a company called FinTool. FinTool is the sponsor. FinTool has all these founders, great, but we don't care about the founders of your company, FinTool. You know what I will care about? I care about the investors of your company. And when I look up these companies and I look at these CEOs for these companies, the CEO of Tiny, Andrew Wilkerson, Tiny, it's in Canada, right? Another CEO of Datica2 or whatever it may be. By the way, this webpage that actually got sponsored for this interview, the webpage is from America. But Florian, whatever, from DataQ. So if I go to the DataQ company, this guy right here, right? DataQ, whatever the hell this is. Hey, when I go in here and I look at the series rounds of funding, I can look up something like this where it says right here, received $101 million, and here's the funding from Iconics, Icon QX, whatever it is. Guess what Icon is? Do you know who they are, guys? Their operations, I'm just letting you know, functions as a hybrid family office, ultra high net worth clients. Their client base primarily derives from wealthy, from technology and high finance and entertainment industries. Go down a little bit further. It says right here, in addition to retail clients, the firm covers institutional clients as well, such as the Canadian Pension Fund, CPPIB. We've talked about this, how this same fund is the largest investor in all of America for private equity firms. Oh, I know, it gets better. Because as I go over here and I see a company like Datadog by Oliver. Hey, Oliver, how you doing? Datadog. We'll go to Datadog, and I look at Datadog, and guess who Datadog got their money from? Series C round led by, yes, Datadog opened up 2016 with $94.5 million in Series D, round led by, guess who else? The same hedge fund. So you mean to tell me CCPIB, whatever, the Canadian Pension Plan Investment Board, backs the companies that actually run this, that are the investors of this company called FinTool, and you want to know how we got here? Because of guys like this. Guys like this. Oh, it doesn't end there, guys. I've got more for you. Here we go. Let's hear them again.
Yeah, and are these mostly other Canadians? Are they international? And how do you think, do you have to have like a Cayman offshore fund for your international folks?
Yeah, so we have a master feeder structure. So we have a U.S. onshore LP for U.S. investors, and we have a Cayman offshore fund that deals with our Canadians and offshore investors. So, you're meeting them everywhere. It's not just, for us, 25, 30% of our money is from the U.S., 20% of our money is from Canada, 50% is offshore. But like the U.S. side, a lot of it came from, my co-founder, Bruce Winson, who was very integral on growing this business early.
Don't worry, Bruce is actually South African. He's over here. He's at a different committee with Bernadette Capital. I already looked at them. You have more American dollars in this company called ANSON funds than you do Canadian dollars. We get it. And you're a Canadian company, right? I get it. We'll go see what you have to say else again.
It's hard to understand the attributions, right? Or articulate what's working, what's not, and does it really reflect in your P&L or how you can show it? And at the end of the day, we have, because of our growth over time, we have pattern recognition, we have access to our data. We can cut through all the information to really see what works and what's not. A good example is we love shorting vol. And, we love when, there's euphoria and sentiment around names, stocks go up, but also the volatility on the options moves. And so for us, a stock's already gone like that. And then there's calls here that the vol is not much higher, and you can take an extra few dollars off by shorting those calls. But what we realized in the post-meme world, the risk reward isn't there the way it used to be, because you can make $3, but if you're wrong and these things get memed, they could go to 30. So at that point, the data to us suggests you shouldn't be shorting calls the way we used to. So we've really adapted that strategy because the risk reward isn't there. GameStop and AMC and Hertz, great examples. Like we were in the thick of things during COVID, and we're making we did very, very well on the long side in our deal book, but we were still shorting the meme-esque world. And what we realized is, when we're normally batting, our batting average is 700, 800, we're usually right. And you're suddenly not getting things right and you're getting them really wrong. You need to just say, listen, it's not working. Cut the strategy. Like, you have to have the fortitude to say, you know what, be objective. When it's not working, cut it. And so, we cut risk on the short side during, the meme period during COVID, and even last year, right? There were so many companies around AI and data centers and nuclear and quantum. And, a lot of these companies have nothing to it, but you can't stand in front of a bullet train.
Yeah.
Yeah, we know. We know. And forgive the interviewee, he can't forgive himself for not really diving in and asking the questions you guys want answers to. He's there to read the questions that were given to him. Believe it. I've heard every answer. We still have more to go, but I'm telling you what's happening here. These guys set it up to go long on those certain ones that they pump. They go out. But here's the problem that you have with all of this, okay? I'm just going to explain it to you. ANSON funds. There's a real trigger here. And I haven't even hit it yet. But when I hit with the trigger, it's all going to make sense to you guys in a minute, because timelines and dates actually matter. But let's hear what he has to say.
Now, the SPAC boom obviously subsided a little bit. There are still, it's become definitely more popular than it was before 2021, but it's not quite the same. So when you bring somebody on, you make a big investment in an area like that, and then the opportunity set dials back. How do you manage that as a business?
You have to be dynamic in your thinking. So like, SPACs was our life for, upwards of 18 months, 2 years. And all we were thinking about is new issues and who's going to come with another SPAC and currying favor with the investment banks and the management teams and trying to get allocations. And then one day it stops working and you have to realize it's not working and pivot. And so the mistake portfolio managers make is they, rely on a strategy and think that they have to keep going at it. And you have to be able to realize when it's not working. And so, SPACs was great. And you realized one deal wasn't working, second deal wasn't working. You say, listen, let's cut this back. And the same thing happened in our pipeline, right? We did a great amount of deals and deals were great. And then after a while, they don't work. And you have to realize, okay, 3, 4 aren't working. You got to scale back. You always have to be on your toes, right? So, we are always agile and able to switch on a dime, right? And that's the benefit of the multi-strategy approach. You aren't reliant on one thing to be your engine. You can, what is the real role of a CIO? You're a conductor, right? You're literally looking what's worked. The sax guys, the string guys are doing well. Let's put the emphasis on the string guys, right? The strings aren't working so well. Let's go to the trumpet, and then that's the beauty, is just being able to see over the horizon and saying, focus on what works and limiting what doesn't.
These aren't investments. Like, they go chief investment officer and all you're doing is shorting stocks, but you're doing more than just shorting. Remember what I told you about shorts, guys. These guys do not play fair. They manipulate the outcomes that you see in front of you. Just to be clear, Moez Kassam here. Moez Kassam is actually already under indictment. He's been arrested, and he's doing this interview while he's under indictment. He is rolling over right now on everybody. Andrew left, Nate Anderson. You know who Nate Anderson is? He's the creator and the founder of Hindenburg Research. Now listen, guys, I've gone to Hindenburg Research. Great pieces on there. They do some really good work. That's not what's in question here. I'll explain it to you in a minute.
We touched on it a little bit with the meme stock mania, but just the growth of the options market. Do you find yourself doing more in options as that has grown and become more liquid since the start of your career?
We definitely do a lot of work around options. As I mentioned, we're a little leery of shorting options the way we had historically, but that what you're referring to, we call it the gamma squeeze. So people are, a stock moves like that and it goes to $10 and people are buying the $15 calls and $20 calls. And there's a vortex of people moving it up. And that can have a huge detrimental effect on someone who's short those types of names. We're very actively watching all lines of options on names we're in, and we're very cognizant of that proliferation part of the market as well.
But I mean, specifically, like if you wanted to short a name, maybe in 2010, you probably would have done it by directly shorting it. Now there might be more interesting ways that you can get the size of position that you want in puts or some sort of other option structure that maybe you couldn't have done before, just because it's a deeper and more liquid market.
Yeah, to me, there's no free lunch. I think the option market is pretty sophisticated, right? Everybody comes back to looking at Citadel and Ken Griffin. I always tell our guys internally, that put you're trying to buy, that's Ken Griffin on the other side. These things are very efficiently priced. Like the puts are very expensive on companies that you believe are acting untoward or have a lot of volatility associated with them. So, I believe if you want to short a stock, it's best to short the stock because of the merits and issues there and deal with portfolio allocation. For us, we're very cognizant about risk. We take it on a very sophisticated path. So we look at, our risk, not just on a single name issue, but correlations among other things. And so for us, we take that very seriously. And it's a primary driver of how and when our books get created.
I don't have time for this dude. He's a complete thief. But I'm going to show you guys something here. Okay? If you guys want to watch the whole interview, just Google Moez Kassam and go check him out. It's under the Monetary Matters Network. About 20,000 followers. Go check them out. Here we go. Now, ANSON funds, right here. ANSON funds, ANSON Advisors Inc., they go ahead and they get charged, right, by the SEC. SEC gives them some charges because they were, right here, as a result of the funds trading, the short activist shares of the trading profits exceeded $1.1 million. They end up getting fined like $3 million or 1.2 right here. ANSON funds agreed to pay civil charge of $1.2 million. That's it. And they paid an additional right here. So $2.25 million for securities fraud. And here's the real fraud. Here's the real thing that they have them on, guys. They have it. Read the headline here from Bloomberg. It says, short sellers' secret talks and alliances emerge in court battle. This is happening in Canada right now. This is not happening here. That's why it's not headline news. But don't worry. I found it. Why Nate Anderson's Hindenburg Research is in trouble after shutting down. You guys, he shut down January, I believe the 13th. Was it the 13th? Right after that video that he came out with. Did I write it down? I thought I wrote it down. Goodness gracious, Marantz. I take all these notes all damn morning in my head, on paper. Doesn't matter. He got shut down. He shut it down himself, allegedly, saying, I'm done. Okay, yeah, you're done, Nate. We know why. Here's what Nate was doing. Nate is writing these pieces. But Nate's also giving the info to hedge funds before he publishes the pieces. You see, people got greedy. Someone's paying for these stories. You thought it was just clicks on a website? You thought it was just Hindenburg Research betting on the downside of a stock? Oh, that's not enough. Days after the U.S. short seller Hindenburg Research announced its shutdown, documents from the Canadian court case have revealed explosive details on how it allegedly colluded with hedge funds. Hey, plural, guys, plural. It colluded with they have everybody listed. So we're going to go right here. It's going to say here, ANSON Funds chief Moez Kassam admitted in court filings that his firm shared their research with a wide variety of sources, including Hindenburg, Nate Anderson, Muddy Waters, Carson Block, and Citron, Andrew Left. Everybody's in on this. In one case, ANSON Funds and Hindenburg Research shared information on a Canadian ride-sharing firm, FaceDrive. Later, Hindenburg Research published a 26-page report, and the firm claiming FaceDrive had overstated the capabilities while struggling during the pandemic. The report led to the stock collapse for the firm, and it had to rebrand itself and settle the complaint with Canadian regulator. Yeah, they're destroying companies with this paper. Now, I'm not saying it's fraudulent. I'm not saying they're wrong. That's not the point. The point is that they're trading on non-publicly traded information. If it's non-public information, and they haven't posted it yet. You're a credible source. You're now doing collusion. You're now doing securities fraud. You're manipulating the outcome after the fact. You buy the position and then you publish the story. You can't do that. You can't do that. But guys, let me tell you something. I make connect the dots videos. I have 90 of them. Today's the 90th one. All the information I've gotten was public. I didn't come out and say, here's what I did behind the scenes. Maybe it is not public. Maybe I put together something here that I can figure out. But I'm not betting on it. And I'm not telling you guys to bet on it. Like, that's not the way it works. These guys are paying each other, and then they start doing it themselves. They really start doing the stories themselves. So where do the stories come from? That's what you got to ask yourself. So you follow the people who make all the millions, and I'm going to show you what's happening right now. So something like this. ANSON funds, wire fraud charges, and money leaving the fund. So they are right here. ANSON funds and Moez Kassam in particular had a terrible March. We're at the end of March, but this is it right now. The pressure from the Department of Justice is increasing, and Moez and ANSON are rolling on everyone. This is from a source with ANSON funds. And obviously they have a source because they wrote a whole damn paper on this. And I'm talking about multiple pages on this website about ANSON itself. What we know is that ANSON Fund's case is being handled by the California Division of the Department of Justice that specializes in racketeering charges. My God, I hope they get David Mitchery. I really hope they get him. It's in California. He's got to be in there. If you don't know, Hindenburg Research did a whole thing on Mullen Automotive years ago, and it destroyed them, and it should. We also know that Moez is heading along to see the Department of Justice Monday, the 31st of March. We imagine he's going to imagine to rat a few more people out. He's got a list of people he's going to talk about. Guys, this guy's rolling over. He's facing 20 years in jail. 20 years in prison. The same source tells us that Moez has been caught dead to rights on multiple charges of wire fraud. And it appears that he's trying to scale it all back. I'm reading right now. Fight the charges, authorities, text messages, Slack conversations, WhatsApp messages, and Bloomberg charts. Cool. Moez is incredibly sloppy and arrogant in his dealings and left a mountain of evidence for attorneys, as we saw with the can trust messages that we have covered in the first place. You know what happened? He was sending emails. They were sending emails to each other. Hindenburg was sending emails to ANSON funds, telling them it's going to go down from here. Go ahead, bet the downside on Monday morning. Like, they were literally giving them the heads up. Moez will be going to jail as things currently stand. He is looking at 20 years behind bars, and so he's making a desperate final push to roll over on people so they'll reduce the charges to 18 months, we hear. It's an ambitious goal, but he's looking at more to 5 to 7. From what I do know, what they were stating was that he was offering $50 million to the Department of Justice to go ahead and give him a lighter sentence. He tried to buy his way out of it. They denied that. But it's not just the banks. Moez is rolling over on everyone mentioned in the previous post. Anyone who has shading dealings and any sort of tie-in. Moez, Department of J, targeted activities should be in full preparation mode. It's time to run for cover. That's what they say here. So this is what was just announced. This is all just came right now. The fund itself, $991 million. I don't know where that's going to go because they used to have billions of dollars under management. But paying all the money back. Legal expenses will have to be paid back to the LPs, to the limited partners. People want their money back. It's going to be tough. They'll be duty-bound to recover it from ANSON and Moez. Yes, they will, once he goes to jail. He's definitely going to prison. They have him. Is Andrew Left turning against ANSON funds? This wouldn't be a surprise. Of course it wouldn't. Left had held strong until the end, telling numerous people that Moez would never betray him. He was wrong, and likely just now is realizing this. This may be the reasons why Left put out a tweet on Guerrilla Technologies, claiming that they are issuing false statements. If you don't know who's the largest institutional shareholder of Guerrilla Technologies, ANSON funds. So Andrew Left is attacking him with all he's got left, but ANSON funds, if you guys don't know, they have the full story. They're the ones with the naked short of MMTLP. Now, everyone wants to know what happened there. I don't care about Torchlight. I don't care about MMTLP, and I sure as hell don't care about the next, what was it called? Next Era or Next something? I forget what it's called. Hey, if they're shorting it naked, don't worry. Did you see what just happened to GameStop? I know. this is further proof about Moez Kassam and ANSON Funds and what they did with Josh Flow. Josh Flow is the individual who was committed to the share price, to the shares of, he's a real estate agent about Genius Brands. Guys, you guys remember Genius Brands, GNUS? GNUS, yes. I talked about this before. And Connect the Dots, maybe. Or maybe before I even did Connect the Dots videos. I said I'd never buy this stuff because I already knew what it was. And there were certain people bumping out Genius Brands. And they had all these connections to other private equity firms and whatever it may be. I talked about it before. But what you find out is this guy, Moez Kassam, he actually defrauded their investors. And how did he do it? He did a whole storm. He went long and then short. He convinced everyone he was going long. A strategic plan was initiated by ANSON Funds to make the stock price adhere to the long-short rule of elevator up, stairs down, with the addition of the safety net. Now, he told everybody he was going long the stock. They would do all of this while giving GNS and regulators the impression that they were long the stock. In early June of 2020, out of the blue, social media pundits started calling Genius Brands the next Disney. But this wasn't your typical short squeeze, like everyone thought. This was Kassam setting up the manipulative long-short strategy to create unsubstantiated rumors. They do this with the internet. They do this with content creators. They do it all the time. On June 5th, at the peak of the GNUS share price madness, Hindenburg Research, Nate Anderson, entered the picture on cue. Hindenburg was a prominent short seller, and accordingly, the lawsuit filed by Catalyst Capital, it was the direct working relationship with Kassam and ANSON Funds. He put out a piece, boom, hit it hard, took it all the way down to $1.50 within a month. From $8 to $1.50. Who do you think made millions and millions of dollars? Okay, it was unlikely that he paid the direct amount. The consulting fee is rumored to be $300,000 for putting that up. These guys put up a lot of money just to go ahead and knock it all the way down. Now, there's more to this whole story. You guys can keep reading if you want to get there. The DisneyGuide.com, proudly presenting DisneyGuide.com. Check it out. Let me know what you think. GoDaddy website, blah, blah, blah. So they were pumping certain, right here, GNS. I just received a call from the GNS Brands. They said they are putting together a frequently asked question page and asked to come in, if I can come in, the Fire TV app. So that people find out who these guys are. And then you find out on StockWitch it's Josh Flow. And you're like, okay, so these guys pump stocks. Josh Flow right here, Flow Real Estate Team. Boom. 5 minutes until getting back to normal. Just wait, people, and wake up and figure out that it's being pushed down on old news. Someone has to sell at $200,000, like whatever. Like, you guys got to understand, this is what was happening with AMC. This is what happens with Mullen Automotive. This is what happens with Bed Bath & Beyond. They do shit like this. Hey, we're not talking about selling. We're not talking about any of this. But this is what they do. They knock stuff down. They pick it back up. And you have story after story about ANSON Funds throwing everyone under the bus. You can go ahead and read it all right here. It's rumored ANSON Funds offered the feds $50 million to reduce charges. And, of course, my dogs are barking. I don't know what they want. And then right here, Andrew Left and ANSON Funds, how the two crooks conned investors out of billions. Yes. Guys, the reason why I'm talking about all of this, this has other members of the Wolf Pack very nervous. With Mark Kyotis visiting Moez in Toronto some weeks ago, now you'll understand why Mark Kyotis is around. Mark Kyotis is out there doing damage control for his boys, and he's a short seller. He always has been. He's not on the side of retail, but yet he pops out whenever he wants to talk about AMC and GameStop. No, he hangs out with these guys. He goes and visits these guys. This is Canada. This is everything you thought it was. So keep looking at the websites, guys. You guys can find it. It's under marketfrauds.to. Go ahead and read up all the stories on ANSON Funds and Hindenburg Research and the partnership. All the documents. It's being released in court right now. ANSON Funds payments to Nate Anderson. They have that there too. Everything you want to see is here, guys. I could go over and over and over. I choose not to stay here for 3 hours. I already read most of this stuff. That's why I'm telling you. I wanted you to hear it from his mouth himself. He's telling you he wants no part of GameStop. They want to do everything they can to short companies like AMC because they're not organized. We know they're not well organized. But it makes you understand now. They're short sellers betting on the downfall of what private equity is doing. And they know they can get the short built in. They know they can get the pricing built in. Everybody knows this game. And the short sellers are from Canada. Private equity's from America. And guess who's invested in private equity in America? Canada. It's really simple. Follow the dollars, guys. Do your best. I don't have to keep dwelling on that. I'm going to talk to you about something else. It is Saturday, and I hope you guys watch the video at the beginning and get the next bridge. That's what I meant. Now, I know you guys don't know much about like how I just wake up every day and just want to go get it. Like that's all I care about. You know, I just want to wake up and hear the news and find it. I have to go find it. It's not going to come find me. I'm well aware. I want you to know something. I told you that GameStop is doing like the Trump move of their lifetime, right? Like they're literally out here saying they're going to buy something, they're going to offer something, and they're doing the unthinkable a week before the Trump trade comes in with the tariffs. And you saw a couple of indicators give you the proof that that's what's happening. That the Trump trade has accelerated the timeline for a lot of things. It accelerated the timeline for the CoreWeave IPO. CoreWeave, they didn't have to rush to the table, but they want to go get the money while they can. They go ahead and buy it up at $40. And it's a scratch my back, scratch your back. I've seen this happen before. I saw it happen with AMC movie theaters and Highcroft Mining. They had no business doing a deal together, and then they did. And then, okay, boom. You backed them. You gave them $100 million back that they gave you earlier. And now you see CoreWeave saying, okay, we got to go public. We got to get some money out of it. And so they go public. And here comes NVIDIA, whom CoreWeave has already pumped money into. And NVIDIA says, okay, we're going to safety net your stock. And they did yesterday. They finished out at $40 a share. And they're in the after hours right now at $39.97 on the IPO launch. They weren't going to go under 40. They had to have a market cap of $19 billion. They had to have all of these things where they were like locked in on this price. They're fixated on the pricing, right? But it's all about a hedge. It's all about a hedge to a position, and it's all about a money grab for those same said hedge funds. If you're getting $19 billion on stock and you loan $10 billion, you're 2 to 1 on your dollars, on public dollars, on people. So, yeah, I've seen the signs about what's happening here. The last sign that I want to talk about is Warren Buffett. The Warren Buffett indicator, the Buffett indicator that states that this market is over its skis, as I put it. It's really top heavy. Anyone willing to buy the top of this market has to understand that the market's only elevated and propped by the top 7 companies. 30% of it are those companies, whatever it may be, and they're all investing to each other. So the human centipede that is the Magnificent Seven, as they keep eating each other and feeding each other, eventually something's going to happen here. They're going to lose everything. How I lose frames in the middle of this conversation, I'll never understand. Hopefully you guys get the info and the gist of it. I don't want to take up your whole time. My message is this. Get ready for a tough week. Get ready for a tough year. Get ready for a tough life. But nothing's easy. This money's not free. You're going to have to work for it. You're going to have to grind for it. Get your ass back to work. Do the right thing. Take care of the home. Take care of the family. Do everything you got to do. GameStop will be there tomorrow. GameStop's fighting the fight that all these guys are on the other side of. You want to be on the side of Moez Kassam? I didn't think so. He's not the type of dude I want to hang out with. He's just like every other short hedge fund jerk that I've met online and that I've seen. They all have the same edge to them. When they lose, the investment was a meme stock. When they win, well, they're just that great. Cool. Come be great. Watch the clips again, guys. Watch the video again if you want to. I'm busy. Get at me. I'll be buying GameStop on Monday. Rinse and repeat. GameStop. Can't stop, won't stop, GameStop. I'll see you around, millionaires. Peace.